Hello everyone and welcome back. I made a video about today's short, January 3rd, and right now we're going to do a video about yesterday's two trades that happened January 2nd. So this is the area of interest, and I was charting using the NQ chart, but we can do it here as well. So we're going to move over to the 1 hour time frame and find the key level that I wanted to see a reaction off of, right? So we're going to mark this sell side liquidity, and then we're going to mark the actual rejection block right here. So I'm going to extend this a little bit more. My default colors for rejection blocks are orange, gold, etc. And let's go back to visit yesterday. Yesterday's short, the one that's in the fast time lapse. And please let me know if the 20x speed or the 8x speed works better. I'm trying to figure that out, but the idea is that price seemed like it was bouncing off of a key level, but there was no sweep of liquidity. And had there been a chance where price took out this low first on one of the indices, right, then I could understand that there's an SMT, but so far there's no evidence of any form of reversal, etc. And that supports a trade in the direction of high time frame order flow, right? Wanting to reach a target, we think of how the weekly candle and the daily candle are expanding, and we're trying to catch those waves like a surfer. All we're trying to do is just catch some waves in the perfect time, just like surfers. They don't just jump in randomly at any point. They wait for the perfect wave, right? The perfect time. And in this case, we're going to zoom in. I'm going to remove some of the executions, but first let's just mark the actual entry. Sell 3 at 690.25. Right about here. The risk was this high, a 17-point stop loss on the 5-minute, and it should be 690.25. That is correct. And the target, I believe, was the low. I don't really remember right now, but oh, I think it was targeting 50% maybe, just in case of the rejection block, which would have been a 2-to-1. As long as I can get a minimum of 2-to-1, I'm happy, right? So we're gonna remove this rectangle because that's annoying. But anyway, so we had a trim at some point, 74, right? We had T1, and then we had another trim at T2 right here for 668, should be that. Yep, that was T2. And then target 3, I believe, was the 50% of the, let's double check, 49 something. I don't want to move too much, but anyway, right about here, 50% of the rejection block. So that was my T3, right? Target 3. And then we're going to cover the long in a moment. Cancel, hide executions. So what's the logic right here, right? Order flow is bearish, and there was a liquidity sweep, short, like small one. Price, sorry, the magnet tool. Price fails to displace or hold above, and then the up close candle. Now you have price closing below it, turning it into a CSD, a change of state delivery, an order block, right? I make this OB minus red. And we're gonna turn on the fill again just to double check. Where did we get in? It was in this candle as soon as it closed below. I didn't wait for the retest. I didn't mind it. I was aware of the risk. And I think I had maybe a smaller stop loss, and I pointed out that that would be invalidation if it's that wide. And I think I did that because my closest target was very close, so I can use a small stop loss and reassess if it's still valid later without losing full invalidation. Or I don't want to average in. I really want to stick to the 3 micros only for this experiment, I guess. So that's literally the logic behind it, so that I maximize the risk to reward for the first target in case that low holds, especially if one of the other indices does an SMT, right? So first target hit, I marked out how many in dollars, but a quick trick is just to utilize the measuring tool and just see these points, multiply them by 2. Especially since we're going to be dealing a lot with NQ or MNQ, you just multiply this by 2 and you get the actual dollar amount of the P&L. So this would be about $24 and so on. So this was a short from yesterday targeting that. I did not know that it was going to go all the way. There's no guarantee, but that's good enough. I think using also standard deviations, we found out that price can reach even lower, but I just wasn't too certain that it can. So for that, I was just, this should be a 5, but it's okay. I just wanted to target whatever was low-hanging fruit, easy, just in case it doesn't go all the way through. So when it finally swept that liquidity, right now, we now got a change in the state of delivery to the upside. So let's delete all of this and find the long setup, right? In the Discord, while I was live streaming for the team, we were looking at this candle, and it was a gray line. I believe it wasn't recorded yet. And I typed order block in formation, right? When do we know? When price closes above the opening price. That's what creates a change in the state of delivery, right? So when you got it, and ideally it does close above it, showing some strength, and the retest of it would be great. So now you can see right here that I had 2 entries. One when as a starter, separate at 640.25. Let's find that level. Right about here. And it was in the retest just in case I have one starter. So that was the first position. And as soon as it closed, this means that this turns into what? A bullish order block. Why would it be that? Because it is at a key level that swept liquidity. And if we go back to the 1 hour time frame, that's that key low. Retail believes that this low is safe, so they can put their stop losses, thinking maybe it's a strong support area. And I like support and resistance or supply and demand, but as long as liquidity gets run first, then I want to see the formation afterwards. So in this case, we're looking at this low to be run and then price changing the state of delivery after it. Let's move forward. Now that you got a candle close after the short-term low was swept as well, I'll remove that in a moment. Price put in a low. Some people hopped in immediately as if it's a turtle soup. It's not a valid turtle soup setup. But if you take it with low risk, it's up to you. And it provided some upside. Whoever jumped in on it, capturing however much the range was, from here to here, at least like 12 points. Maybe some people believe that this low is safe, wick them out, and then go in their favor, right? So this was the first entry, and the second one I had was at the order block. The 2 other orders, you can see the video, at 633.25, which is right about here, right? So that's when it got filled with the 2 other contracts that now changed the average to roughly around here. Right, and what we wanted to target was this. I did not have the risk and reward tool. The main reason why is that while live streaming in our Discord, I didn't want people giving back gains, taking a trade in the opposite direction of high time frame alignment or high time frame direction expansion. So it was just to show a trade that is less probable but still valid. So I didn't want to expose people to more risk, but that was the idea, to take out that high. And if we remove the executions now to make it a little bit cleaner, this is what happened, right? This one, we're going to make this a little bit thicker. That's that key level. And then you have a short-term sweep to take out anybody who hopped in just because it took out that level, hoping it's maybe Turtle Soup or etc. That other one took out little liquidity. Whoever just jumped in immediately right after that. But technically, the majority of liquidity rested here, right? At this key level. So key level hit, a down close candle runs short-term liquidity, the smaller liquidity, the smaller one basically. And then you get candle close above the opening price of that candle that is supposed to be breaking a level, right? The people who trade breakouts to the downside, maybe they got punished in here. So that was the entry. Actually, the entry was at 33 something. Oh yeah, but counting the other average, it would have been roughly around here. So I don't remember right now, but it's okay. So this is a rejection block. We don't need it anymore, but just to make this a little bit nicer, because the idea was that, sorry, 1 second. I think I switched over to the 1 minute chart, but I measured 50% of the range to take profit at this high. Actually, I was wrong about this. My bad. I think I wanted 50%, and I wanted this specific target. This was T1 using 2 contracts. So take 2 off right here would be amazing if it can happen. That would have been almost a 2-to-1. Decent. I'm not too sure about the exact fill, but the idea was to target roughly about 50% of the range back if it wants to flip. Because it makes it difficult when the weekly candle is already red, right? Going back, it's very clear that the weekly candle is red, the daily candle is red, so we're taking a trade against high time frame expansion, so we can't get too greedy, and we can't open risk in the same position sizing that we do in the direction of the weekly or daily candle expansion, right? Because we're going counter trend, so we have to be mindful of that and be nimble on taking profits. In fact, this trade paid more than the short trade that was a little bit earlier. So if that was the entry from here to here, that was about 24 points. Let's just say 25 times 2 for 1 contract, that would be $50 of profit. 2 contracts off at T1 would have been $100. That would have been $100 with 12 points of risk, right? So you can see in the video, price almost reaches my target to fill me out, and then because I didn't take profit at the rejection block at all, normally I want to make the trade risk-free, but I moved it just to see if it fully wants to invalidate, and that's why my commentary in that video explains that. You can see my decision making in real time of how I want to manage this trade, because this is such a great entry. I still want to give it some wiggle room, and I'm glad I did because it worked out. So I can't remember where the third exit was, but let's pull this up quickly. Right about there. All I wanted was 50%, because order flow was still bearish. There's no sign of reversal. This is way too early to determine a stronger reversal, especially on a lower time frame setup. So that is me trying to assess the risk. I'm going against high time frame continuity. The daily, weekly candle are red, so I shouldn't be greedy. I shouldn't oversize. I shouldn't be risky, right? Regardless, I shouldn't be risky, but there's proper position sizing, normal risk that you take with the trend, with the high time frame and weekly, daily candle expansion, and there's smaller risk you take when you're going counter trend. So this was the trade. I hope it makes sense, and I hope I'm not missing anything. But please feel free to ask questions in the comments. I might do a live stream at some point to address any questions, but we'll work the logistics of it. We do live streams in our group in 8x, and I'm streaming these trades in real time. That's why in the second long video there was a little glimpse of the Forex Factory calendar. I had to trim the video a few times, at least 6 times, because I was moving back and forth in this screen to the Discord, to other websites, while waiting for the setup, because it was long, about 30 minutes long. So the idea is that we do this on live not to give alerts. It's to educate so that you are aware of what to do, right? If this, then that, how to react at these key levels, what to look for. And obviously all credit goes to Michael J. Huddleston, ICT, and everyone in the ICT community that really contributes. I've learned so much from so many people, including T-Trades, MMXM, Fair Value God, Zusi, MMXM, just plenty of people that it's countless. I can't even think from the top of my head, but all I'm trying to do is just share my journey along, show people that it is possible. When people say that trading is not for everybody, I agree with that, but it doesn't mean that everyone's going to fail. No, I just think that it's all about expectations. And if you come in with the proper expectations that you're not going to replace your job in 90 days or 30 days or 2 weeks or get a Lambo next month, you can make a lot of damage, like profit. Sorry, not damage then. You can make a significant side income to where it's worth your time, worth your risk. And this is evidence that using one of the restrictive account balances that you get in Apex or Top Step, starting from 1500, we can grow this. I'm pretty sure this account is over 20-30% up right now from the starting point, right? From 1500 to 1900, using very small risk. Most of my risk is $50. I know that a lot of the videos either show positions in minis, right? Which make it either feel like these accounts, like the experience is so high, their risk appetite is higher, of course they're making that much, or maybe some of them also show ticks values. What I want to do is just make it relatable as much as possible so that you understand that with very small risk, under $100 for a trade, we can find really good opportunities that can capture 2-to-1 risk to reward. And in this case, clearly, this is day 2. I'm actually really happy with the progress. And I might take one of the offers on Apex to do that account as an eval to pass it, using that instead of the paper trading by TradingView. So I hope you make the most out of your time in learning and bringing questions. I hope this is valuable for you. The idea is just to spread awareness and show how these tools can really help us, right? Even if it's making a car payment at $200 a month. Imagine making $200 a month extra, taking a trade for less than an hour, right? You're planning it maybe, for an hour or two, but you're taking with such small risk that over a period of a month, imagine having an extra $200 or $400. I mean, this obviously came from experience. This is up obviously over $400 in 2 days with very small ranges. I mean, if you look at this, right, the short setup from here to here, counting yesterday's move at 400 points in NQ, that's a very small area where you can react and take a trade off of, right? And the idea is to show that there are opportunities. We just have to control that little needle of fear and greed, right? We're trying to walk that balance to where we don't get sucked in over trading or revenge trading when we lose. So, and we do that by sizing down so much. And I have to give credit to T Trades for helping a member um, one time, saying, in order to overcome these PTSD losses that come from losses, massive losses, we have to practice, we have to study, we have to learn, and we have to take a risk that is so small, right? That even the wins don't even matter, right? He typed it. I'm gonna post it in my Twitter, but the key element was, most people say, like, hey, only throw what you're willing to lose, right? T-Trades put a new perspective, new twist on it, and said, to where even the wins are not significant. I was like, huh, you know what? My mentor, the guy who taught me futures, well over, I don't know, at least 7 figures, was capturing and taking profits at $30. He grew a small account from 500, and I never understood why. Like, I had a much smaller account, net worth value by comparison, and I was being more aggressive than him. He was not. He was literally doing it the proper way, focusing on the process, not the money. And so what happened was, he managed to grow because he was respecting the risk, respecting the profit, respecting what the trade offers in terms of target, not trying to get greedy. And over time, those $30 lunch profits grew into dinner profits at $70, and then later $90, and so on. And when the account grew from 500 to 5K in, let's put a realistic timeline, it didn't happen overnight, it didn't happen in 2 months, at least 6 months. With his experience and his discipline, he decided to add more from his own personal money to now size in properly, because his risk appetite allows it. I, on the other hand, failed to grow the account and blew it. So all that is to say that I never understood how my friend, the guy who taught me futures, was willing to capture $30 of profit, $15 of profit, and I was waiting for immediately a trade. I put stop break even. I'm up 30, 40, 60 bucks, and I still don't take the profit because I want a bigger move. Obviously now I understand moves and why they happen, but back then I just was submitting to an indicator to tell me, hey, let the price move. The indicator does not move price, right? We know that. So I just want to put that into perspective on how you recover, how you heal, and you do that by sizing down so much, right? I learned the most after I literally had $80 in my bank account. Like, to the point where I didn't know where to put that money, whether it was to purchase another account or pay for food or I don't know what. And that's when I couldn't afford to open risk. I had to sit my butt down and actually study. Instead of what I was doing before, unlike what I was doing before, which was trying to find shortcuts instead of learning ICT properly, trying to find those clickbaity videos that say, you know, do this for 90 days and quit your job or whatever it is. It's not like that, right? The turtle will always win over the rabbit. Slow and steady is the way to go. And this is showing you, not in minis, in micros, how this is realistic. Even if you take 2 micros, right? 2 instead of 3. Imagine what that would be per month. Even if it's small, even if it's like $500 a month extra using 2 micros. The account is up $400 in 2 days. It's not, it's not something to celebrate right now, because I am going to have losers. I will lose, and I will post them. But it shows you how much potential there is in these day ranges that we get, and how fortunate we are to have volatility, to be able to make money in this tiny little swing point. That was it. Like, right? And with the smallest amount of risk, forget about 400 in 2 days. Think of just a more sustainable $50 a day, 40, $30 a day. I'm sorry about the microphone. And we just don't, we shouldn't take it for granted. That's all I want to share in that perspective. And one more visual, right, on what this volatility looks like. Look at NQ. Look at these monthly candles. Compare, reset the chart. Compare these monthly ranges, 2013. How long ago was this? 2017. Look at these massive, massive monthly ranges. It's insane. Volatility is wild. So the fact that we can capture like small trades under 20, 40 points is a blessing to have. We just have to accept the risk, respect it, and not get greedy, right? Respect the profit. Think of the fact that you can make this amount. Always put your, never forget, right? Like the most basic, I don't know, wage would be roughly around $10 an hour, right? Imagine that. Imagine if you were forced, you were let go from a job to be able to make this kind of money, right? Making $100 in 30 minutes is insane, right? Using very small risk. And that's what I want to spread awareness on, because I totally disagree with people saying trading is not for everybody. The difference is just the mindset. You can use that money to help pay for a credit card, a car payment, a vacation, a getaway, whatever it is that you want to do, but keeping the perspective realistic and thinking long term, right? Slow and steady will always win, and I'll leave you guys with that.